Good morning. My name is Taylor. This is Hacking Company at Remax River City, and I got some teammates with me. This is the Hack&Co team running through a record year, fresh from scoring their 1,000th deal. To put that in perspective, the average agent sells about 6 properties a year. Who here has sold more than 6 properties this year? I am getting an echo. Is anybody else hearing that?
Oh,
It is like an incredible delay here, so I might have to adjust my. All right, are we good now?
Yep.
Okay, well, take me into the market statistics a little bit while I adjust my sound settings there. We're talking about what's going on or what has taken place in September as we go into October. So I'm going to pass it to Anthony D'Souza. Anthony scored our 1,000th deal, and that was a huge accomplishment. So thank you for helping us achieve that. But tell us a little bit right now, is this a buyer's market or a seller's market?
So it really depends what part of the market you're in, but we're having a lot of fun, and we're dealing with some areas where there's a lot less inventory than we expect at this time of year. And so some people are feeling like it's a seller's market, and some people aren't. But I can tell you that the more affordable properties in our market right now are feeling pretty hot. For instance, this last couple of weeks, I've been dealing with multiple offers on condo properties around the 300,000 mark. And so we can see that in the statistics, there has been less listings this in September than there were the month before. And it'll be interesting to see if that trend continues in October.
Is anybody getting the echo now?
No.
It's
Nope.
only me. So I'm going to see what I can do to pop out of here and come back, and I'll let you guys kind of continue the show for the time being, because I want to make sure this doesn't come through on the recording.
It sounds good. So when we talk about whether or not it's a buyer or seller's market, we look at months of inventory. And so during September, it was 3.2 months of inventory, which is technically a balanced market based on what we look at here. And it's slightly leaning towards a buyer's market just compared to what it was in August. But with the lower inventory, it just means that there was also lesser sales that took place in September. Cordell, what are you seeing out there when you're out there with buyers?
yeah, honestly, you kind of hit it right on the nail on the head. It depends on what area of the city you're in, depends on what price point you're looking at. I've helped a client recently buy a property that was on the market for 72 days and we had no issues. And then I helped a client try to buy something that was on the market 28 days. And then we ended up being in multiple offers because right before we offered, a price reduction came. So they hit the nail on the head with the price. And then all of a sudden it opened up to everybody and almost a month on market. And then we're dealing with multiples. So it just depends on the price point, the area. I'm finding St. Albert or even like Southwest super hot.
Yeah, I can definitely agree with that. I was even in a multiple offer situation this past week where our buyers, based on what had sold recently in that community, we came in under list price, but we had super sharp dates for conditions and for possession based on what the seller was looking for. And we won under list price in multiple offers. And so that was a big win for those guys. And I don't necessarily recommend that strategy for everybody, but with certain property types, it is, that type of win is available. It just really depends on the type of property, the market, how long it's been how long it's been for sale. And we were able to give them that advice to help them win, and they're super stoked.
Okay, so take us into that. Like you were saying that there things have to be right, but what about this specific instance? What made you choose that path?
So we looked at recent sales in that building and in the community for properties that are similar to this. We could also see that this property had probably had some struggles. It was pending a whole bunch of times. The agent's telling us that financing keeps falling apart, which isn't, they're probably not feeling great about that. They're probably susceptible to a lower offer, which we had planned on making. And then, of course, another buyer came along that was thinking the same thing. but we wanted to stick to our guns and know that we didn't want to overpay. Obviously, they were overpriced. They were on the market for a while, and they had seen some struggles. So we just wanted to be super sharp. We had a deposit that was probably 3 times what the average would be for that type of property at that price point. We had conditions. We could do it in about a week on a condo. We knew that they already had their condo docs in order, so we asked the right questions, and then we could close by the end of the month, which is what the seller would want and what I would want if I was a seller as well. Just get this done and over with. And so we were able to show them that we could bring them a win, and that we'd be willing to get close on price, but not overpay.
So to simplify that, you were saying that this is a situation where you researched first, even asking questions to the other agent. So there's a lot of positioning, and that's how you determine that this is the right strategy. Is that right?
That's right.
A lot of people don't understand how much research goes in before placing an offer, but we do so much research that until the client's ready to write an offer, we're not price checking. Like, we're committing to easily an hour worth of work. So when someone's talking to us about, oh yeah, what's that property? Most of the properties right now, like according to the market statistics, would sell for about 2% under, right? In situations where we start to get them away from the reference points, like longer average days on market, maybe we know they're not getting enough action because we can tell that they're mispriced. These are the things that lead into that final strategy. But it all starts with being able to see what's going on in that listing from knowing reference points for the market right now. So when we talk about reference points for the market, the Realtors Association of Edmonton just popped off their market stats. And what they're telling us is that this market is at balance right now, right?
That's right.
Yep.
What are the contributing factors to making it balanced? Like, why is it not a buyer's advantage right now like it has been every September for the last 5 years?
Low inventory is playing a big factor into that. There's less to
Good
choose
answer.
from.
Okay, low inventory. And so what we're saying is that when we're talking about supply and demand, supply is down. What about demand?
Demand is also starting to tinker off just a little bit, just because of time of year. The kids just went back to school. Everyone's getting their life in order for the year coming. It's getting a little bit colder. People are maybe getting back from vacations, not really thinking about that right now. So
I think
supply
that could
and
be
demand.
intentional, but demand is up. Like, when we take a look at how many properties actually sold this last month, 2,058 sales for our market last year, 1,600. The year before that, 1,900. In fact, the average for 5 years is under 1,800. And here we are shooting well above that at 2,000 sales. So we're seeing that supply has been down. Like, when I was looking at the inventory numbers, I could see through the summer we weren't seeing as many listings as normal. But now, this last month, when it comes to new listings on the market, what were you guys' thoughts on new listings?
Well, they're definitely getting a lot more attention. Like, everybody, they feel like they've seen everything that they're willing to see, or that's in their price range. And then any new listing is like, we got to see it. We really got to check this one out. Can we get there? How quickly can we get there? And yeah, some of the new listings have been great, and some of them not so great. Not a lot of preparation goes in, or they're overlisting their property, and so we just sit and watch. But the new stuff that's really good is going quick.
And from the wide angle, like, we had a similar amount of listings this month as we had over the last 5 years for average. So earlier this year, we were really struggling to get inventory, especially during the time that normally families with kids move. That's actually one of the questions that's trending on the internet right now. Jane, it's your birthday today, Jane. Happy birthday.
Happy
Thank
birthday.
you.
So Jane Vu, you had an incredible September, right? Like, when you take a look at helping 7 families, the average agent does 6 sales in a year. And that was something that was incredible as you closed off that month. So very well done.
Thank you.
And when we're talking about low inventory, Why do you think that less people are listing houses like year to date? Like, why do you think that that was a trend earlier this year?
I think people still listing the house, but the demanding going up because a lot of people come here to buy a house, and a lot of people in the position that they ready to buy right now because the interest rates go up, so they need to buy to close their mortgage as soon as possible. That lead the demand going up. So that's make the supplies not enough. So create the market become to the seller. That's also make the market right now is go balanced as you said before, because the inventory is like go up, but the demand the inventory is go down, but the buyer go up. So it's make the normally the time of the year this year is going to be like the seller market, but right now because of the lower inventories, so it's make the market balance, I
Mm-hmm.
think.
So I know that you're very tapped into buyer demand. You've been helping people move to Edmonton from all over the country, and so have most of our teammates. Like, who's moved more than 2 people here this year from out of province? Yeah, we got lots of people coming in. So with that, I can definitely understand what you're saying. That's explaining why we're getting demand outside of the natural flow. Like, we should have stronger demand like this in the playoff season of real estate, right? But having it happen later this year is because it's part of utility real estate. The people that get to choose when they want to move, those families with kids, they move in the spring so they can, or they buy and sell in the spring so they can target that summer months to move. But then utility real estate is people getting job transfers, which is a big thing that we're seeing, or choosing to move because of other factors. And one of those factors is that interest rates continues to notch up. We thought we were getting a reprieve, but when we did predictions for what was going to happen with the Bank of Canada a few weeks ago, what were our predictions? Well, I can tell you that I was wrong. I thought it was going to go up. What did you think, Cordell?
Same thing. I thought it was going to continue to keep creeping up.
Anthony?
Same.
And what did you think, Jane?
I think it's going to stay the same by that time.
And so you were right. All right. But
Yeah.
now we're going into a next period here where we're seeing that on the 25th of October, the Bank of Canada is going to meet again, right?
Yeah.
So, Jane, do you still feel confident that they're going to stay?
No, it's going to go up for sure this time.
You think it's going to go up, and what do you guys think? Cordell, Tony?
I think it's bound to happen.
Okay, well, Tony was with me in Vancouver last week.
Mm-hmm.
And we were watching Benjamin Tal, the chief economist of CIBC, and he was explaining the evolutionary pressures, but he was also more explaining how the government sees inflationary pressures. So the way that they calculate it basically means that they're always going to shoot hot. So they're going to be more likely to lower rates at the risk of recession than they would be to not lower rates to preserve from a recession. Like, they're always going to shoot hot based on how they calculate. So I think that they're going up, and I think that the reason is that oil is trending 30% up month over month, 2 months in a row. Have you guys heard me say this before?
Only a couple of times.
Yeah.
Only every day for the last 2 months. This is like the last piece of the giant puzzle. And as this connects and as more people move here and as this becomes less common, meaning a place where you can buy an affordable house and have a job, because layoffs are rampant throughout the rest of Canada right now, this is going to ignite our market. This is going to be a really big change. Now, we have Chris Sheffield. He is in the comments here. I'm going to try to show this on screen. Edmonton is so cheap, take advantage of it. Getting quotes in Ontario of $250,000 for backyard suites. Ooh. Have you seen that? So like I met somebody in the United States that's the ADU king. And what I mean by that is auxiliary dwelling units. So right now you can put anything that qualifies as a livable structure in your yard in Toronto, and you can rent that out. Like, they are massively changing right now, and this is the dollar figure. So I want you to think about something like a mobile home and the fact that it's $250,000 in Ontario. So thanks for the information there, Chris, and we agree with you. In fact, that's one of our questions that we had coming in, trending on the internet right now. Is Edmonton a good place to invest in real estate? Tony, can you tell us why? Back it up with one stat.
I think why is just affordability. Like, honestly, the average price when people I'm talking to are thinking about moving to Alberta, they're like, Alberta's great. Maybe we'll think about Calgary because, the mountains are close. And then they realize how different the pricing is between Edmonton and Calgary. And they go, my dollar goes way further up in Edmonton and we're only a couple hours away. And so average price for sure is the biggest reason why people are thinking, let's move out west.
I love that. Benchmark price in Edmonton is $430,000, and for most of my 10-year career, Calgary, a similar property would be about $100,000 difference. So you would pay $100,000. You pay $530 for what you get in Edmonton for $430. And what we're talking about, for people that aren't familiar here, this is the lowest population density for like a major city in North America. Everybody here has a yard, right? And so we're talking about $430,000 buying you a 3-bedroom house with a finished basement and a garage. You're going to pay more when you're in more desirable locations. But if you were to take that same measurement to Calgary, it's $680,000 right now. That's a 50% difference. And that means that Edmonton is poised to rise. We are the last kick at the can. Everybody else had a ton of fun in pandemic watching their market go up. Now they might feel differently about it.
Yeah, we were just scratching the surface last year. And this week I had 4 conversations with families, 2 from BC, 2 from Ontario, 1 that's already pending. They're relocating here and they cannot wait to get here. They're tired of being so far out of reach of home ownership, and they want to start families and they can relocate, and jobs are, there's plentiful. Lots of unions are advertising for us as well about moving to Alberta. And so I think it's awesome. We've got a great city here. And honestly, the people I drive around, they're like, oh, this is much different than I thought. It's really nice here. Everything's kind of spaced out and there's lots of new construction available. There's lots of great houses. You're not kind of on top of everybody. And I think that feedback's great.
I love how everyone's opinion of Edmonton is like their expectations are managed. Like, Jane, you're talking to people that have trouble in some cases knowing which province is which because they're coming from so far away, right? Just understanding the geography. And when you're trying to explain to people what Edmonton is, what do they think it is before they come here?
People know more about Calgary than Edmonton. Just like me before, I just know about Calgary. I don't know about the Edmonton. So when I come here and then I live here for a while, it's totally different. Like before, we think Edmonton is like rural area, something like that, and way smaller than Calgary. But when I come here, like Edmonton have like 6 Costco, like compared with other cities, it's like really big. So
that's a good measurement, is how many Costcos.
Yeah.
Right? Like, can I get to Costco from anywhere that I would want to live? A lot of people already also miss out that Edmonton is the capital city of Canada, or of Alberta. So because of that, we also have a lot of government work here, and they don't see from the outside that Edmonton has, there's a few other things that make us unique. Like, we have the largest amount of natural, what do they call it? Preserve land, or they call it something, what's the word I'm looking for? What do they call the Edmonton River Valley? It's like protected land, or what do they call it?
I thought it was isn't
National
it something
Park.
to do? Yes.
Yeah. So as far as that goes, there's a ton of ways to interact with nature around here. We have a lot going on and a thriving tech sector. But when you see unions like Tony mentioned that are advertising for people to move here, that's because we're about to head back to the days where an electrician can make like $250,000 a year here. Right? Like, Cordell, you have a lot of connections to the oil field. For those skilled workers, those people that have journeyman tickets, can you give them some reference points?
Like, do you mean like dollar figures?
Yeah, like when oil is doing well, what kind of money do you see people with different type of tickets making?
Honestly, if you're willing to go up north, which a large percentage of people who are up north in like the Fort McMurray region, they can work about 6 months out of the year and make about 200 to 250,000 a year, and that's just working half the year. And that's pretty standard with most trades. It kind of depends on the intensity level of the trade you're in. Via mechanics will make more than plumbers, but that's just because of the intensity of the work they're doing. But overall, you can't work in Fort McMurray and not make 200,000 a year. It's pretty much impossible.
So this is kind of the gateway to the north. This is like the last big stop before you get to some places that are very like industry driven, like Fort McMurray, right?
Mm-hmm.
So there's a lot of people here that settle in places just outside of Edmonton, like Fort Saskatchewan. Tony, what can you buy for $500,000 in Fort Saskatchewan right now?
Well, you're definitely getting at least a double garage attached. You're probably getting something that has been recently renovated in the last 5 to 10 years, and a decent yard, and probably a really great location, like backing onto school or parks or walking trails.
And depending on what you want, definitely like move-in ready at $500,000 in Fort Saskatchewan. Yeah. So now I want you to imagine your life for a moment. You're making $200,000 to $250,000 a year, and it does mean that you have to travel for work, right? But you're only working part of the year, and you're using that money to pay off a $500,000 purchase with whatever equity you are bringing from wherever you're moving out of. Like, that is why people are moving here in droves. The math is awesome. You want to retire somewhere? Well, you can retire somewhere else if you come and work in Alberta for a while. If you want to see the retirement program, just go visit Kelowna or in Vancouver Island. That's the Alberta retirement program right there. But the money is made here, right? And we're really seeing that right now. Let's give some other reference points for what's going on in Edmonton right now. What do you think is like a big indicator when you look at the stats package? Like, is it something that caught your eye, like days on market, or do you notice like sales to listing ratio? Is there anywhere to get a great deal in Edmonton?
Right now I'm seeing it's still very possible to get a great deal on condos, just because they're still saturated in the market. So like I personally helped the client get about 6.5% off list price, and it was only listed for about 40 days. So that's higher, or that's lower than average for a condo, but it's just people are trying to sell their condos so they can finally make that upgrade they've been looking to do.
Okay, and whoever has their phone not muted, if you could manage that, we got a couple different ringers coming off here. It's really loud through the mic.
I think what we also have is, what I'm seeing is days on market is trending down for all property types. So we have lower inventory coming to the market. We also had a little bit less sales just because we know the time of year, there's less attention, but the people that are pretty serious. But yeah, the days on market is trending down for all property types, which is interesting to me. So I can't wait to see what it's like for October.
Yep, I definitely see that. And that's the big key in our marketplace, is the fact that you can still on average get a 5% rip. And what I mean by that is the distance between list and sale price on average for condos right now in Edmonton is 5%. Okay. And if you want some reference points for a condo, I think if you bring $250,000 right now and were to go to a desirable neighborhood near downtown like Otwell, you're going to have a pretty good experience. Is that right from where you were shopping, Cordell?
Yeah, and we were even we were in Garneau, so that we were walking distance to the university. That's where we were.
So that's south side, the real prime point, right near our office. And you're a gangster. So you went in there, did great research, and there's a reason why we want all of our teammates to be both listing agents and purchase agents, is because you could feel the heartbeat from the other side. You knew those people were nervous, didn't you?
Yep.
And it was lower than average days on market for condos. Because average days on market for condos right now is 54 days. You're at 40 days, and then you take an extra 1.5 above or beyond what's average there.
Yep.
That is what we mean when we say 5-star experiences. Like, you were not looking for the finish line, you were looking for the win.
Mm-hmm.
And that's something that we've seen from you all year round. We can also see we also see it in the reviews that people leave. And I think that's why a lot of people choose us. So that was a good win, and also a good beat on the condo market. Like, we're talking 900 square foot, 2-bedroom, 2-bathroom, bring $250,000, and you're probably going to have a good time downtown or on the south side near the university. And that's also the story of Edmonton right now, is rentals. What the heck is going on here? Like I'm having landlords raising rent by 19% from tenant to tenant. That's illegal in other places. The most, what's the most you can do in Toronto? 3%?
Something like that.
Yeah.
Well, for those people that we talked to in Vancouver, this looked like the promised land. We were trying to explain to them what it's like to be a landlord here, and they're like, how often can you raise the rent? Pretty often.
Whenever you feel like it.
How much can you change it by? A lot. There are no rent control here in Edmonton. Like there's no.
I mean, to be fair, the rent is so much higher in those other places. So even if they did only go 3%, it's still likely a bigger jump than what you can do here.
Well, what you can do isn't really limited here, but what you can support with our
What
market,
you would do.
I do agree. But if our market starts moving in a really dynamic direction, landlords are safe here. Whereas if the market moves in a really dynamic direction in Toronto, landlords are screwed there because they can't adjust the rent to the market. And a lot of people don't understand that in rent-controlled buildings, what you end up with is they can, from tenant to tenant, raise rents. So the new tenants pay an exorbitant amount to subsidize the maintenance that those rent-controlled units pay, where it would actually even out if it was a fair market. But that's kind of the nature of how these things work. But Edmonton is a landlord-friendly community. You can evict people yourself here. You don't need a landlord and tenant board. Like this is the Wild West, and we like it. So talking about what we're expecting going forward as we close off here, right now, heading into October, what do you see for October, November, December when you're forecasting out? I want to start with Jane. So Jane, you've been getting some reference points here as to how everything's moving. Given what you're seeing right now, what has your attention and what do you see as being kind of interesting to follow as we go through this next 3 months?
In the next 3 months, especially for October, I think October still keep the beat with September. It's like it's gonna be slow down a little bit, but it still get the traffic here because I believe the rate gonna raise again and gonna put more people come to Edmonton because affordable, and maybe in November and December because it's winter coming and a lot of holiday coming, so it's maybe a little bit slow down, but still maybe another market like Ontario or BC is get slowed down a lot. Here people keep moving here, so I believe it's still keep going up here.
That's good that's a good perspective. So you're thinking that you're going to see a natural seasonal slow,
Yeah.
but there's going to be this X factor, which is more people migrating here.
Yes, that's what I believe.
Cordell, how do you see it?
Very similarly, I think if the Bank of Canada increases the rates again, all those people that got rate holds, let's say mid-August, are really going to be under pressure. Mid-August, beginning of September, they were just toying with the idea. It's going to become very real to them. And then the key is let's move before the holidays. I think we're definitely going to see that in the end of October and November. That way people have the December month to settle in right before the holiday.
I like your perspective there because we saw that as interest rates changing. Anytime they change rates, we see this wave come through the market of buyers that have to action to save their deal, right?
Yeah.
And so that is going to come at this natural time of low inventory. So Jane was already talking about this pressured effect in demand, where the increase in interest rates is going to drive more people here anyway. Then what Cordell's telling us is that there's buyers here that haven't been pushed to action. There's not a lot to choose from. They're kind of like poking around, not pulling the trigger, but prices are going to go up because they're going to be in competition. Tony, you went out and showed 3 properties the other day that a client wanted to buy, and how did that go?
You know what? All of them ended up in multiple offers, and some of them have been on the market for 500 plus days.
Holy
Over
wow.
relist, but now attention's on them, and they've actually got a great unit. But yeah, I think that trend's going to continue as well. Like what I see is less inventory in October. The only property type that went down days on market for 3 months in a row is apartment style condos. So I think that trend continues. And, you know, based on what you mentioned about Benjamin Tall from CIBC, he's not predicting rates to go down substantially until the third quarter next year at minimum. And so if they do go down at all, like we know how much pressure there's going to be for buyers that are like, we need to buy now because the prices are down. All it's going to do is make their monthly expenses more, because interest rates might be lower, but the demand for those houses are going to bump the prices up. And so you're just going to end up paying more for the same house you could buy now. So I don't really know why there's a good reason to wait, but a lot of people think that that's what they should be doing. And all the experts are saying the opposite. You should buy now if you need to buy, and get those rates locked in now if you can.
But man, finding experts is tough when you're talking about Edmonton, because all the experts are weighing in Toronto and Vancouver, where the advice is the opposite. You should hold and wait, hold and wait. Prices are going down, deals are getting better. Here in Edmonton, if you think interest rates go up and house prices go down, you've been proven wrong already. We've seen so many interest rate hikes here, and our market is poised to move up. Now, the big key, what we're all watching, is the condo market. That 5% deal you can get right now, when that starts to close to 2, I want you guys to all get ready and like cover your ears. Just cover your ears, because it's going to happen. I was doing mortgages here in 2005 and 2006. We saw property go up like 50% in 2 years. You couldn't even get signs on the lawn. Okay, that's how fast stuff was selling. So this winter, we're going to be talking more about low inventory strategies. We have just got back. We had teammates coming back from Vancouver and Kelowna. We're all heading out to Toronto to get more low inventory strategies. We have a great network, and we are drawing on them to be able to deliver our clients fantastic experiences next year. It's going to be really hard as a buyer. Okay. There's going to be not a lot of inventory out there, but it's going to be worthwhile to move up market. If you're selling and buying, you want to get more money into the Edmonton market right now, because things are about to change. I'm excited for what happens next. How about you guys?
Yes.
All right, well, let's get to it. We've got many clients to help, so I hope everybody does well. Cordell Scher, thanks for joining us this morning.
No worries.
Anthony D'Souza, always a pleasure to see you. And Jane Vu, happy birthday. Thanks for joining us this morning. And thank you for joining us. We appreciate it. This is Hack&Co at RE/MAX River City. And if you're looking to save yourself and your friends from a 3-star experience in real estate, call our Fast Agent hotline. You can get that number at 780-909-6770. We can help you no matter where you're coming from. Hope you're doing awesome. Cheers.